Hello, citizens. Welcome to the first Mining City Trading webinar. Today, I will tell you how traders buy, sell, and trade assets like Bitcoin, Bitcoin Vault, or Ethereum. And I will also tell you how to read charts. So let's begin. But before we do, today, I will be your host, and please feel comfortable as my guests. But at the same time, let's follow some rules together for a smoother and pleasant journey. So here are some rules that will help you make this webinar more fluent. First of all, feel free to ask any questions regarding educational issues in the Q&A section. Please do not use it for other topics or internal discussion. If someone enters a question you would like to have answered, please type a small statement like, "Good question." Our team, as hosts, will follow the chat during the presentations, and all questions that require further information or haven't been answered yet will be gathered and answered later on. Now, let's move on to some more general issues. The main purpose of Mining City Edu webinars is to help our community better understand the crypto and trading world. Sharing knowledge and being respectful are very important to us. It is a project that we create together, as together we grow. We are a community that creates a friendly atmosphere. We treat each other with respect here, so please, please remember about courtesy, self-promotion, spam, irrelevant content are not allowed, and all authors will be banned. We will also make sure that everyone feels safe. Disrespectful comments regarding race, religion, culture, sexual orientation, gender, or identity will not be tolerated, and authors of such comments will be banned. Okay, so now that's over with, let's start. Let's take a brief look at what we will be covering today. We will begin our session with a brief introduction about what cryptocurrency is, what an exchange is, and everything you need to know about cryptocurrency. Next, we will talk about understanding the charts and analyzing trends. Here, we will learn about how to read and understand the charts, the basic terminology, the terminology that may come across while studying the charts. This will in turn help you to understand and analyze the current trends, enabling you to make an informed decision based on facts and not just intuition. We will then talk about how to buy and sell cryptocurrency, and most importantly, how you can manage your assets. Before you can understand the world of cryptocurrency trading, you need to get familiar with the basics. To make it all easier on everyone, I will provide a simple definition for the most popular terms that you will hear throughout this webinar. And one term you probably all already know is cryptocurrency, also called digital currency or a digital asset. There are over 6,000 different cryptocurrencies, including Bitcoin, Ethereum, Ripple, or indeed Bitcoin Vault, to name just a few. Just like regular money, which in the crypto universe is called fiat money, cryptocurrencies are used as a medium of exchange. But they don't have a physical form, yet they still carry value. A single Bitcoin is today worth more than a small car. They are balances stored on a public ledger called blockchain. Now I'm guessing that you're all wondering what a blockchain is. So, without further ado, let me explain. Blockchain is a system that keeps a record of all transactions across the network on all computers of this network. This means that every exchange ever made will be permanently stored within that system. That is why blockchain is used for many applications, from music rights to shipping, art, and much more anyway. Another thing you should know is that cryptocurrencies like Bitcoin or Bitcoin Vault are also mined on the blockchain. Mining is a process in which a computer solves a complex mathematical puzzle to confirm transactions on the blockchain, and then, as a reward, uncovers new coin. And usually, the value associated with the cryptocurrency asset depends on the difficulty in mining and the extent of its market adoption. Of course, mining cryptocurrencies requires special equipment. So if people want to start trading cryptocurrencies, they have an alternative option. They can buy it on an exchange. In the real world, when we talk about trading and exchanges, we are basically talking about buying and selling of different types of assets and commodities, like cars, real estate, even gold. Similar manner, crypto exchanges are platforms where you can buy and sell cryptocurrencies like BTC, ETH, BTCV, and XRP. Crypto exchanges also allow trading between cryptocurrencies. The most important thing you need to know about the cryptocurrency trading market is that it is very volatile. To put it simply, the prices change rapidly, sometimes even drastically, and within minutes. They may be related to something just outside the world of crypto. For example, positive unemployment data in the US, or the strengthening of the Japanese yen, or, God forbid, the start of a new major war or conflict. But the fact, I'm sorry, I just went very fast indeed. Yes. But the fact that cryptocurrency market, I'm sorry for that, but the fact that the cryptocurrency market changes so dynamically, it can be both a risk as well as an advantage. You can pick crypto coins that will go up or down 5, 10, 20% in a day. And that is something you don't often see in a stock market or a forex market. So let us now look at the cryptocurrency chart. Before we get into analyzing the chart, it is also important to understand the elements within it. You see those things here? These things are called candlesticks. Each candlestick represents the movement of prices over a given period of time. The green candle means that the price has risen over a determined time period, while the red candle shows a decline in prices. The body of the candle shows you the differences between the opening and closing price of that time period, while the shadows at each end of the candle show you the highest or lowest point the price has gone over the course of that period. The x-axis on the graph shows you the timeline, while the y-axis represents the price of the asset. The candlesticks represent the price movement, green for when it goes up and red for when it goes down. The horizontal green line you can see here represents the current price of the asset. Also, underneath the main chart, you will see the volume bars representing the volume traded under each candlestick in a set time period. Now I will tell you more about them. You see, market volume, it can be defined as a total number of transactions observed in a specific marketplace over a specified time period. In simple terms, it just means that the amount of trade over a period of time. That's all. If we observe a daily volume of $1 million, for example, it simply means that users/traders have bought and sold assets worth $1 million over the past 24 hours. This is therefore a good indicator of future price movements, and it can be very useful while traders plan their trade strategy and making an informed decision. You see, with each cryptocurrency, we can observe something called a trend. Trends are patterns that can show us which way the price of a cryptocurrency is moving. There's even a special section of technical analysis dedicated to trends. It explains different trends and helps traders understand what is happening with the price. The most common way to identify trends is by using trend lines. They connect a series of lows and highs of a particular candlestick on a chart. And let me show you how that looks. You see, trends are like waves. They go up and down. It's like climbing a hill or a mountain. We can climb up, rest a little, and then we can continue climbing, or we can go downhill. Similarly, cryptocurrency graphs have three types of trends. The upward trend, like the name suggests, describes the hike in demand, supply, or prices. Likewise, the downward trend shows a decline in demand, supply, or prices. Where the sideways trend or the side trend can be defined as a constant when there is neither a hike nor a decline. So, before you actually start trading, it is crucial to understand, uncover, and analyze where the market is heading. Whether the trade lines are predicting a hike or are the price going to tumble. When it comes to market technical analysis, there are some levels of value that can cause a change in the trend of the cryptocurrency. There are two levels to be considered. We usually talk about the support level when a certain price level trends change from down to up. Similarly, we talk about the resistance level when they go from up to down. You might wonder how we decide where the level actually is. Well, it is usually determined by the market sentiments, whether the other traders on the exchange are positive or negative about the future of the coin. So, when a price reaches a certain level a couple of times, but no one is willing to pay more or less than that, we set a support or a resistance level there. The situation is usually followed by a reversal of trend. Of course, when the price finally crosses that certain level, this might also mean a beginning of a new trend. As you can see here, between April and May, the price oscillated around the support level in the vicinity of $7,000. Most of these support and resistance levels are usually around figures or close to such, so $7,000, $7,500. In this case, traders are waiting for Bitcoin to reach $7,000 or even a bit lower, and they are happy to buy at this point. There is a large amount of coins changing hands here, as you can see. And you can see that by the trading volume. At one point in the first days of May, the price exceeds this level and rises further. Now it has a new support level of around 9,000. The old resistance level is now the new support level, and vice versa. This is where a new group of traders think that if they buy at this price, 9,000, they will be happy, as they think that the price is still relatively low. You see, the price rises close to the 9,000 a few times, but each time there are not enough buyers to keep the price above this particular level. Well, we can see a trading activity for the next 9 weeks at around that price. This is a clear example of a side trend, something I talked about earlier. Then, in the last week of July, the price starts rising. This rise was also visible in the trading volume. It's another indicator that the price is about to change. In a flurry of activity over the next few days, the price breaks through the 10,500 support and keeps on rising steadily to 12,500. This is where there are more traders who are willing to sell than buy. Mostly because traders who bought BTC in April had already doubled their investment in dollars at this price. We can speculate that many traders have made a profit at this very point. They sell Bitcoin and they enjoyed their returns. The general market consensus for Bitcoin at this point in time, it's not confident that the price will rise any further. But let's take a closer look at the chart from September, from the 5th of September to the 8th of September, and understand the price movements of BTCV versus BTC. Each candlestick in this BTCV versus BTC chart represents a full 1 hour of price movements. Different kinds of candles can be used, but generally, for analysis purposes, traders find hourly candles useful. We can see that by connecting the lows, there is an upward trend right over here. You can see it here, as the price of BTCV rises. Similarly, by connecting the heights, we can see a downward trend whilst the price of BTCV drops. I hope now that you understand what the trends are, and if you have any more questions about the trends, please leave them in the Q&A box and I will try to answer them as soon as I can. Now, each candlestick in this BTCV/BTC chart represents a full hour of price movements, as I said before. And using technical analysis, we can understand that between the 3rd and 8th of September, BTCV found a support level at 0.011 BTC. That's the green line over here. And it found a resistance level at 0.012.9 BTC over here. You see, these are the key moments for BTCV price. At these moments, there was a change in trend. It can be observed once the price crosses the support level on September the 3rd, there is a beginning of a new trend, which indicates a future impact on the price of Bitcoin Vault. As you can see, as soon as the price broke through the support line, there is a constant fluctuation sideways, and that indicates a new trend. So now that you know basics, let's move on to the trading and management of cryptocurrency using different kinds of orders. Okay, so on every exchange, there is something called an order book. This is the list of orders used to record the interest in a particular cryptocurrency. You see, those orders are called bids and asks. A bid happens when a buyer would like to purchase a certain amount of cryptocurrency at a specific price. An ask happens when a seller would like to sell a certain amount of cryptocurrency at a specific price. The order book is also used to determine which orders can be fully or partially executed by matching the bids and asks. In this example here, we see that sellers in red, they want to sell BTCV for 0.01175 of a BTC, while buyers in green want to buy BTCV for 0.0118540 BTC. Well, we call that difference in a price a spread. And as you can probably figure out, the smaller the spread is, the more likely that traders will be inclined to buy the coin. Now that you know what an order book is, let's talk about market order. And market order is the buying and selling of cryptocurrency quickly at the market price. The market price is the most recent and current trading price on the exchange. It constantly changes, and it is determined on trading exchange through the consensus of buying orders and selling orders. In this example, we can see how a market buy order can be placed to buy BTCV at a market price. So traders choose market option, enter the amount of BTCV to be purchased, and click on buy to make a purchase. There's also something called a limit order. It is another option on the crypto exchange to buy cryptocurrency. Using it, traders make an order to buy or sell cryptocurrency at a specific price. A buy limit order can only be executed when the price is exactly as set or lower. Before showing you that in the example, let me briefly explain the other terms you see here on the screen. Trading volume is the number of coins that are used in the trade. Volume is the amount of cryptocurrency you will get from the trade. In this case, Bitcoin Vault. The yellow line indicates how much of users' funds we will use in a trade. They can use 25%, 50%, 75%, or 100%, or anything in between. A sell limit order can only be executed when the price is exactly as set or higher. Now, look at the example on the screen. It shows a buy limit order of BTCV using BTC only if BTCV to BTC price reaches 0.0118568. Nice number. This means that the trade can only happen once the cryptocurrency value reaches the limit price. Okay, so now that we understand the basics of the tools that the traders have at their disposal, we can finally discuss why BTCV price dropped on the 24th of August this year. Here, you can see a chart from the 23rd of August with 1 hour candlesticks. The price was getting closer and touching the support level at $360 from 1400 hours to the end of the 23rd of August. At midnight, it broke the support level and the price went down significantly. You can observe that after the price dropped below the support level of $360, there was a big spike in volume, and you can observe it here. What is important to note is that people sold rather than bought BTCV. This only increased the sale pressure on Bitcoin Vault, which basically means that the price was forced even lower. Since there was no strong support level, there was a big fall. And we must remember that BTCV had risen almost constantly since March and had not given traders a chance to build any real support and resistance mode. So the price dove tremendously due to a giant sellout. As you can see here at the bottom, it was the value of the sale volume tripled, what confirms that there were more people willing to sell than buy, and that is the simple reason. This again caused a further price drop until the psychological support level of $100. So only since then the price started bouncing back, and it bounced back to about $200 in the first instant. Every trade has its very own set of risks, and cryptocurrency is no exception. So before you actually set out to become a trader, let's talk about the three of the primary risks involved. The first thing you should keep in mind is that the cryptocurrency market is extremely volatile, and the value of your assets can drastically change with no warning whatsoever. Well, cryptocurrencies transactions, apart from Bitcoin Vault, are totally irreversible. You may lose what you have invested, and as a rule of thumb, do not use the money you cannot afford to lose. Now that you know the risks involved here, there are a few tried and tested practices that you should always keep in mind while trading. First of all, before making transactions, always double check the addresses of the recipient, amount of assets, and the transaction fee. Please always remember to send correct currency. For instance, sending BTC to an Ethereum address will result in a loss of coins. Next, please use your personal wallet to store your savings. Also, it's very important that you create your very own record of every transaction that you have made. And don't make rash decisions. Think before you leave. For your first few transfers, always use a very small amount of assets to check if everything works fine, if the addresses work fine, if the transfers go through. Okay, this is it for now. I thank you for watching this webinar. I hope that you will be more confident in how trading works right now. And if you have any more questions, and I'm sure you do, please post them in our Q&A section. Thank you. Good night.